Welcome back. President Trump tweeting this morning. He just wrote this. Listen to this. Crazy Maxine Waters, said by some to be one of the most corrupt people in politics, is rapidly becoming together with Nancy Pelosi, the face of the Democrat Party. Her ranting and raving, even referring to herself as a wounded animal, will make people flee the Democrats. The president up talking about this morning. Meanwhile, investors are headed into the 4th of July holiday with trade and tariffs still on their minds. Futures pointing to a higher opening this morning for the broader averages, about 100 points higher on the Dow. It is a half day of trading for the Independence Day holiday this morning. Joining me right now is Brandywine Global Portfolio Manager Jack McIntyre. And Jack, it's good to see you. Thank you so much for joining us.
Yep, good morning.
In terms of your portfolio, your overweight emerging markets, tell us how you see these markets today.
Right. So, and it's been a bumpy ride being in emerging markets, but we're not investing for 1 quarter, 2 quarters. We're investing for the next several years. I still think there's a huge valuation anomaly. I think that what we've seen in a lot of, and you've got to be selective in emerging markets. You can't just invest in them, just blanket. But some just are creating tremendous value. And, you know, we've asked the question, if we weren't already invested in there, would we be buying? And the answer is still yes.
Is there value in the U.S. that you see right now? I mean, with all of these issues over trade and the Fed, et cetera.
Yeah, so I think with the uncertainty around trade and where it's going to go, I think there's value in treasuries. And I think the long end of the curve is telling us that there's some uncertainty about, hey, this growth trajectory. So, yeah, treasuries versus Japanese government bonds, gilts, bunds, yeah, I think they offer value.
But getting back to the emerging markets, the dollar and the Fed rate hikes, those are two huge impacts in that area. And so what do you see going forward? Because if the Fed's going to keep hiking and the dollar's going to remain strong, we've got a problem.
So we are betting that the Fed listens to the yield curve. So the yield curve, it's going to invert if they continue on this path. Right. And what is that telling us? Well, it's telling us that, hey, don't worry about inflation, or, hey, maybe growth is going to slow down. So if the Fed, so what's the 4 most dangerous words in the English language? This time is different. And Powell has sort of suggested that, hey, I'm not going to listen to the yield curve. I think that would be a big mistake.
Well, but the other side of this that the Fed has to look at is an economy that's growing really strongly. You know, we're getting something like 4% growth in the second quarter, and an unemployment rate that's down in the 3s and possibly going in high 3s and possibly going into the mid 3s. Can the Fed afford to stop raising interest rates when this economy could overheat with all the stimulus?
No, it's a great point. But, you know, markets are forward-looking. You know, if we think about the dots, they raised it from 3 to 4 as one member did that. So I wouldn't think it would take much to pull that back. Keep in mind, as we get into October, the balance sheet's going to start shrinking at $50 billion a month. I think that's a tightening embedded in that. We've got the stress in EM. If that impacts the global economy, that's going to be a tightening on the U.S. So the dollar strength a little bit is a little bit of a tightening as well.
So you're high on EM right now. Let's talk a little bit about China, the biggest economy in emerging markets. How vulnerable are they to a trade war? And, you know, we've seen some soft growth numbers out of China. Are they slowing down? Yeah,
they are slowing down. So they're deleveraging, but they're also doing adding some liquidity. So China doesn't keep me up at night, but they are slowing. So you're right, it's the trade stuff, and this is having done this for decades and decades. This is the tough part of being a money manager in this environment, because the uncertainty around trade. We're used to looking at economies, business cycle. You've got this uncertainty over trade. Ultimately, we're sort of betting that cooler heads prevail. But that might not be the case. That's why you want to have some defensive things in your portfolio.
So the president's threat to possibly tax cars coming into the country, a big topic of debate. He believes it's his biggest trade leverage. That's what we've been talking about this morning. Here's what he said when I sat down with him on Friday in that exclusive interview.
The European Union is possibly as bad as China, just smaller. Okay? It's terrible what they do to us. European Union, take a look at the car situation. They send the Mercedes in. We can't send our cars in. Look what they do to our farmers. They don't want our farm products. You know, in all fairness, they have their farmers, so they want to protect their farmers. But we don't protect ours, and they protect theirs.
But we're not sure if he's going to go through with this. We're not sure if there actually is going to be that tariff on cars. That's the big threat. What do you think as a market participant?
So, okay, I agree with your comments from prior segment. I think that this is negotiating.
That's what I think.
You know, we know his style. Start extreme and then sort of pivot, maybe not quite to center, but sort of pivot. The risk associated with that is that if I can figure that out, China's going to figure that out. Other trading partners are going to figure that out at some point.
That's why Europe threatened $300 billion in retaliatory tariffs.
Right.
which is about 1/5 of U.S. exports every year. So this isn't just about soup cans and beer cans.
Yeah, it's 19%.
This is a big deal. And there's an estimate that the cost of any automobile would go up $5,000 per automobile if these tariffs are put in place. And it seems like that the president has gotten really hot or upset about German cars, which represent 4% of all the cars sold in the United States every year. And it's worth pointing out that BMW is a net exporter. BMW, in its comments to the Commerce Department, pointed out that it actually lowered the U.S. trade deficit by $1 billion because it's a net exporter of cars that it builds in South Carolina.
Right, exactly. Just to tag onto that, Dig, and I think something that has to be said whenever we talk about fairness in the auto sector, our tariffs on light trucks are much higher than 25%. The European. We're protecting that industry. So you can't talk about what we're doing with what happens with cars without talking about light trucks, and we're protecting that as much as the Europeans are protecting.
I say it.
We don't talk about that enough.
I say it all. I said it yesterday.
You did.
I'm not saying you don't, but I'm just saying you have to keep saying it. It's just not right to say that the playing field is unbalanced without talking about how we protect our own industry.
Which is why she reminds us all the time. Jack,
annoyingly so.
No, not at all.
One other
important reminder.
The president in that clip said that the European Union is smaller than China. It's actually not right.
No, he said that the Europeans could be actually worse than China, but a lot of people pushed back on that.
Their market is much bigger than the Chinese market. That's the only point that I wanted to make. He said it was smaller.
I see what you're saying.
EU economy is much bigger than the Chinese economy.
For now. That will change in
eventually,
about 10 years.
But right now, it's about the size of our economy.
Sure.
That's a good point. Jack, thank you so much for joining us this
pleasure.
morning. Jack McIntyre there.